Hey everyone, whenever the Prime Minister makes an announcement on 15th August from the Red Fort, you should always listen to it carefully. Because these are not just ceremonial words. Many times, major policy changes have been revealed by the PM that can directly impact India's economy and stock market. And this year, PM Modi announced a big move. This Diwali, he has promised double Diwali for all Indians by bringing big GST reforms. So in today's video, we'll first try to understand the context. Why this GST rate cut has been announced. Second, we'll get into the detail of this proposed GST rate cut. And finally, we'll try to figure out which sectors and stocks can benefit from it. Alright, let's get started. So if you look at the macro environment, India is facing two key challenges. First is global headwind. Right now, the world economy is going through massive uncertainty. The biggest trigger is coming from the US, where President Trump has increased tariff on imports from multiple countries that has shaken global trade flows. As a result, India's export-oriented sector, that has always been a key driver for the growth, are facing a lot of pressure, be it IT, textile, chemical, or even auto sector. This has made us realize that India should not depend upon any other country for growth. India is primarily a consumption-driven economy thanks to its 140 crore population. So now government clearly want to focus on India's biggest strength, that is consumption. Second challenge is domestic slowdown. Over the last few quarters, consumption in India has weakened. FMCG companies have reported sluggish rural demand. Consumer durables like AC, TV, washing machine saw slower sales growth due to inflation and higher prices. Even auto sector has been struggling with lower demand. To counter this slowdown, the government has already announced a series of measures. First, income tax rate cut to leave more disposable money in people's hand. Second, RBI rate cut to reduce EMI burden. And third, liquidity injection plus CRR cut to ensure banks have enough money to lend. But despite these steps, demand revival wasn't strong enough. And that's where PM Modi has announced the biggest bazooka, that is GST rate cut that directly impacts every person in the country. Now let us understand the proposed rate cut details and which sectors can benefit from this. So basically, government has proposed to simplify the current 5-tier GST structure, that is 0, 5, 12, 18, 28% into two slab system, 5% and 18%, with a potential 40% slab for sin goods that include your tobacco, pan masala. With this, approximately 99% of items that are currently at 12% slab are proposed to move to 5%, and 90% item at 28% slab can move to 18%. It is expected to get implemented by October month, aligning with the festive season. Now, which sectors would benefit from it? So first sector that is clear winner is FMCG. Currently, personal care items like soap, toothpaste carry 18% GST, while most packaged food and beverages are at 12%. With GST reduced from 18 to 12 and 12 to 5, companies can either pass on the savings on lower MRP or run more consumer offers. Please note that FMCG demand is highly price sensitive, especially in rural India where income levels are lower. So small rate cut can drive significant uptick in volume. So companies like HUL, Nestle, Dabur, Marico, Britannia, Tata Consumer, Varun Beverage, Mrs. Bector Food should benefit from this rate cut. Mind you, these FMCG companies have struggled in the past and not generated much return in the last few years. So this can be a good trigger. Second sector is consumer durables. Items like AC, refrigerator, TV, they are currently taxed at 28%. And that can move to 18%. So rate cut in white goods should stimulate demand, particularly in the middle class income. Top stocks in this segment include your Voltas, Whirlpool, Dixon and Havells. Please note that Voltas share price has tanked significantly after unusually cool summer. So if demand picks up, it can benefit Voltas. Third sector is cables and wires. Cables and wires including electrical cable, insulated wires and optical fiber cable are currently taxed at 28% under the GST regime, as they are classified as non-essential or industrial goods. They are likely to see a reduction to 18% that would lower product prices and stimulate demand. Stock that can benefit from this segment include Polycab and KEI. Fourth sector is automobile. Especially small cars and two-wheeler and three-wheeler that are currently taxed at 28% may see a reduction to 18%. Making them more affordable and driving sales in price-sensitive market. Stock that can benefit from this segment include Bajaj Auto, Hero Moto, TVS Motor, Eicher Motor and Maruti. Then fifth sector is cement. Cement is currently taxed at 28%. If it moves to 18%, It could lower construction cost and boost demand in infrastructure and real estate. Stock that can benefit from this segment include Ultratech Cement, Shree Cement, Ambuja Cement and Dalmia Bharat. Sixth sector is hospitality and tourism. Hospitality sector has multiple GST slabs. If it falls from 18% to 12% or from 12 to 5%, it would boost tourism and hotel demand that can benefit companies like Indian Hotel, EIH, Lemon Tree, Chalet Hotel and Sami Hotel. So to wrap this up, this GST rate cut is not just a short-term consumption booster. It's also a strong signal from the government that they want to put more money in people's hand and stimulate domestic demand. Sectors like FMCG, hospitality and autos are likely to see an immediate benefit, while banks and financials can gain indirectly through higher credit growth as demand picks up. But remember, while this looks positive in the near term, the real test will be whether companies can translate this into sustained earning growth or not. As investors, our job is to track demand recovery and not get carried away only by headlines. At the end of the day, this move reinforces one big theme. India's growth story will increasingly be powered by domestic consumption rather than relying too much on export or global demand. Now tell me in the comment, which sector or stocks do you think would benefit the most from this GST rate cut? Thanks for watching this video. I'll see you next one. Till then, take care.